Monthly Update with CEO Christian Magoon.
Thanks for tuning in to the August update on some of the funds from Amplify ETFs. Christian, this month we want to focus on some of the opportunities in the blockchain space, hedge equity opportunities, and then income opportunities. And let's start with the blockchain and crypto space. What is the opportunity for blockchain investors today?
Well, we think blockchain technology is very promising, Jay. We see a lot of different use cases, from food safety to mortgages to debt issuance from central banks. Of course, maybe what grabs most of the headlines is what's happening in one area of blockchain technology, which is cryptocurrency. We think that there's a lot of growth there. So for investors who want to capitalize on this area, this type of technology through equities, we think Block offers an attractive solution.
Excellent. And Christian, is it too late to invest in the blockchain space? Has the opportunity passed?
You know, Jay, we really believe it's the early days of blockchain technology. We're just starting to see some of the use cases roll out. Certainly, cryptocurrency has taken most of the headlines thus far, but we think there's many other applications. Really, the blockchain is about using this digital ledger to create trust in terms of internet and virtual transactions. And there's a lot of different opportunities and industries that blockchain will migrate into. And we think it's still in the early days, so it's not too late at all for investors to consider this as part of a technology or innovation type allocation in their portfolio.
Christian, do you think we're going to see a Bitcoin ETF this year?
I think we could see a Bitcoin ETF this year. It would be futures based here in the US. But what's interesting, Jay, is we've actually added 3 Bitcoin ETFs to Block. These are Canadian listed Bitcoin ETFs. So US investors can get exposure via Block to these Canadian Bitcoin ETFs. They're not futures based. They track or seek to track the spot price of Bitcoin. And we think this is another first we're offering via Block to participate in the rise of blockchain and cryptocurrency as an industry.
Excellent. To learn more about the Block ETF, please visit blocketf.com. Let's switch gears and talk about hedging equity. Christian, today the markets are at all-time highs. What are some of your thoughts around hedging equity exposure in today's market?
Well, Jay, I'd say it's a smart idea for most investors to have hedged equity exposure. It should be a strategic allocation. And right now, maybe even a tactical allocation, as you mentioned, where we're at all-time highs in many of the indexes. We've seen a streak of many days where we haven't seen a 5% or more correction even in the equity indices. So, you know, there's not a better time to put on some hedged protection than when you're at all-time highs. It's not a worse time to do it when you've already dropped 10 or 20%, which are normal type corrections in the equity market. So we think the Black Swan ETF offers a convenient way to do that. And you know what? Are you giving up a lot of equity upside? I don't think so. Black Swan has actually returned about 9% this year through September 3rd. So something that's already given you some capital appreciation along the way.
Philosophically, is the Black Swan ETF a strategic hold or a tactical allocation during periods like this, in your opinion?
So we really believe that the Black Swan ETF, a hedged equity strategy, is a strategic allocation that adds value to investors. It helps them ride the ups and downs of the market and stay invested during volatile times. Now, right now, with markets at all-time highs and not seeing a major correction for hundreds of days at this point in the equity markets, we think that there could be a case for a tactical allocation, especially going into the tumultuous, or at least historically tumultuous period of the fall in U.S. equity markets.
Excellent. Let's move on to income opportunities. Christian, we're recording this at a time where the 10-year is yielding 130 basis points, the S&P 500, 124 basis points, and advisors have clients that need income. How do you think financial advisors should look for opportunities to deliver that income?
I think there's opportunities in the equity space and equity strategies. We have a covered call focused ETF that invests in blue chip companies, collects the dividends from them, and then tactically writes covered calls on select blue chip companies. This generates an historical yield more than double the S&P 500 and a material amount of income for investors if they're currently getting 1.2, 1.3%. We think this is prudent, especially today, given the fact that it's investing in blue chip companies, which historically, during times of market distress, hold up better than the average company out in the marketplace. So this is one area that we offer that offers, I think, attractive, high current income to investors in this low rate world.
And Christian, historically, during periods of volatility, covered calls tend to provide some protection. Would you anticipate Devo being able to do that going forward?
Yeah, so covered call strategies tend to shine during market declines or periods of market volatility. Why is that? Because covered call strategies are collecting that option income, which often acts as a cushion relative to an equity market decline. Devo should be no different. Does tactically write covered calls and does collect option income. So we expect that would be part of a cushion in a market decline. In addition, its portfolio itself, blue chip companies tend to have better financials, better wherewithal than the average US equity out there in the marketplace. So these are kind of two factors that we think combine to create a defensive posture that also yields attractive income.
Yeah, you can learn more about the Devo ETF by visiting devoetf.com. Christian, I want to wrap with this as we're heading into the fourth quarter. As somebody in the ETF space who has created a lot of ETFs, what do you see unfolding over the next 4 months of this year in the ETF marketplace?
Well, we've had a record year for asset gathering, and we're certainly seeing a lot more products coming to market and being filed. I think the innovation will continue. We're seeing more innovation around the use of options. Many of these option type strategies are gearing investors to be more protected or structuring their outcomes during different types of equity market conditions. I think we'll still see some more thematics rollouts that offer new market segments to investors. And overall, I think we'll continue to see the average price point for ETFs fall. I think this is all good news for ETF investors. They're going to have more choice. They're going to probably see lower costs. And there's going to be more innovation, more types of outcomes that they can use the ETF structure to access. So pretty excited to see what the end of 2021 holds for the ETF market.
Excellent. To learn more about Amplify ETFs, please visit amplifyetfs.com.